Where does this leave us then? We've got CPI coming in, yes, a shade below estimates, but still double the target.
Well, I think the reason that markets are shocked by this is that you had that nasty shock out of the US CPI print yesterday. So traders were really braced for inflation to go up again. That's what economists thought would happen, and it hasn't. You also had the labour market data yesterday, and traders had paired their bets on when the Bank of England would rate cut this year. Actually, now they've flipped back, so they're fully pricing in 3 rate cuts from the Bank of England again. I've been getting trolled by Torsten Bell from the Resolution Foundation off the back of this. I feel like I'm getting... he's really targeting the markets, but the point is that it's an overreaction in his view to really just blips in the data. We're talking about a 0.1% margin here.
What is actually, in terms of the nitty-gritty, what is actually driving this drop? What part of the data?
Well, so you've got core inflation lower than economists thought. Services inflation actually is a key consideration for the Bank of England, and that edged up, but by less than expected. And even if you look on a monthly basis, the drop was double what economists expected. So a lot of relief for not only the Bank of England, but also for the government as well. Now we just need to see whether Britain tipped into a recession tomorrow. And that was thought to be, you know, a difficult backdrop for the 2 by-elections that we've got in the UK today. But I'm sure that this print will be a relief to the Prime Minister.
Yeah, really interesting. And we'll see what the growth picture delivers, what the recession picture delivers, even if it means more to the politicians, perhaps, than it might to the market on that sort of very binary thing. What about where this leaves the Bank of England, then, Lizzie, on the back of this data and yesterday's data? Where are we heading?
Yeah, it's obviously looking like we're still going to get rate cuts this year. The question is the timing. The pricing now is that traders are fully pricing in the first move in August. They do see 3 cuts this year. Do we get more in 2025? 2025, I have to think what year we're in. 2025 next year. That is more questionable. But as you've seen, the pound's down to 125, a 1-week low. Gilts have had a big rally off the back of this as well.